So we'll be starting the session now. A very good evening to all of you. Hope all of you are doing well. Thank you all for joining the webinar today. So our agenda for today's webinar is to discuss about our new fund offering, Mirae Asset Nifty PSU Bank ETF. It's a passive scheme and replicates the Nifty PSU Bank Total Return Index. Talking about the benchmark, the Nifty PSU Bank Index is designed to reflect the performance of public sector banks listed on the National Stock Exchange. So, the banking sector overall has been a very large contributor to India's GDP. And if I talk about the numbers, it contributes as good as 7.7% to the nation's output and employs more than 15 million people in total. Oh, sorry, 1.5 million in total. If we talk about banks, banks play a very crucial role within our economy, providing financing to businesses as well as individuals. And at the same time, they provide a safe mode or a secured mode of parking our funds. They also play a very vital role in priority sector lending sectors like agriculture, MSMEs, small businesses, etc. So overall, the banking sector is very crucial for any nation's growth and is closely linked to the GDP of the country. So you may also notice that when a nation grows and the GDP grows, the banking sector would also grow along with it. It's also known as the backbone of our economy. If we talk about the total size of the banking industry in India, the total deposits stood north of 200 lakh crores across all banks in India, and the total loans lent out by banks were a staggering 167 lakh crores. So that's the size of the Indian banking sector, and the numbers that I'm stating includes the private sector, public sector, and the small finance banks. Talking about the profitability, PSU Bank, so banking sector as a whole generates a net interest income of close to 2 lakh crores, and the profit post tax stood at a record high of 90,000 crores at the end of Q1 FY25. If we talk about the asset quality, banks have been recording a very significant improvement in their asset quality over the past decade. The gross NPA ratios that measures the bad loans in our banking sector stood at a mere 2.7%. Yes, the number is 2.7, but it's a stark improvement from back in the previous decade. If we talk about the other numbers, the CASA ratio, the very important metric for a bank, stood at 37.6%, and the ROA stood at 1.4% for the entire industry. So when we talk about banking, it's basically divided into three segments: public sector banks, private sector banks, and small finance banks. So let's dwell into public sector banks. So out of the whole, out of the entire India, around 65% of the total deposits are with PSU banks, and these banks have played a vital role and a dominant role in serving the hinterland of India. So they are a very big contributor to the semi-urban and the rural areas. And as the sector grows, as the banking sector grows, this share might increase further. So when we talk about numbers, how are PSU bank different from the private sector banks? So if we just look at the rural in specific, where 52% of the new branches opened since 2005 were private in rural and urban areas were from private banks. 77% of the total new branches opened across India was 70% were from PSU banks. So PSU banks have played a major role in the rural and the semi-urban part of our country. And if I talk about numbers, in FY24 alone, 34% of the newly opened branches of PSU banks are in rural and semi urban areas. And the rural economy and the rural India still remains the large unbanked part of our economy. So, going further, this unbanked portion is going to be the place where the credit gap is to be filled. If I talk about numbers, around 20% of rural India is banked. But if we look at the future prospect, there's still a very big gap to be filled. Even in terms of infrastructure, public sector banks have a wider reach in terms of the network that they have. They have a higher number of on-site and off-site ATMs and debit card distribution as compared to private sector banks. If I talk about volumes and by value in just of debit cards, PSU Banks leads the way. And the reason for that is pretty simpler, that the rural and the semi-urban portion of our economy still relies on UPI and debit card sort of modes as their preferred mode of payments. If, on the contrary, if we look at the private sector banks, they are more dominant in the urban areas and have a higher share in segments like the credit cards. So, if we talk about banks, as we previously said, they play a very important role in growing an economy, right? And the key goal of any bank is to provide credit to the masses. But when we talk about PSU banks, they have played a major role in promoting economic growth and financial inclusion, and particularly where, again, to the rural and semi urban parts of our country. So they have played an instrumental role in the key government initiatives launched to promote financial inclusion within our economy. Schemes like the Kisan Credit Card or the Credit Link Subsidy Scheme or Mudra loans, which provides collateral-free loans and subsidized loans to micro entrepreneurs, individuals, and MSMEs, have been some of the key initiatives where the government has driven it via the PSU banks. Even in terms of facilities, PSU banks have some specific facilities that are only available with them. A classic example can be the capital gains account. So whenever you sell a real estate, you park your proceeds into a capital account. So government has specifically restricted this particular facility to public sector banks. And as government promotes more and more rural-based schemes to promote more financial inclusion, so there would be more such initiatives that would be again driven by these PSU banks. So let's go back to 2016. Banks were facing, and all of us would remember that PSU banks were in a crisis. And why was it so? Because a large number of projects financed by these PSU banks had turned bad. And there were concerns related to it, that whether these PSU banks would have adequate capital to recover from these bad loans, and these bad loans in all hinder the stability of the overall stability of the banking system. And adding to that, there was the Ireland FS default in 2018, which questioned the overall which questioned the overall systematic stability of our banking system. And then there were the infamous scams like the Nirav Modi and the PNB scam of and the Kingfisher scam, which had again hit the PSU banking segment. And thereafter, government devised a strategy so that it doesn't fail to hit its 8% GDP growth target. And that strategy in specific is known as the 4R strategy, which was devised by the RBI and Ministry of Finance to battle with this bad debt. So the 4R strategy was built on four pillars. First was recognition, where there was a system developed to recognize this NPA. There were new laws like the IBCs, that was the resolution pillar. Third was recapitalization, where they were provided capital infusion. And lastly, there was reforms that were the fourth pillar that initially led to better oversight in this PSU banking segment. So the 4R strategy in totality dealt with issues like bad debt, poor asset quality, and weak balance sheet. And the end result, how was it? It was much better. There was a turnaround in these PSU banks. And again, this whole improvement that has come over the past 5 to 6 years can be directly reflected in the performance of the underlying companies of PSU Bank stocks. Coming to one important criteria, that is the NPA. So NPA, as previously, that is non-performing assets. Again, a very important metric for a bank's financial health. So if we see in the graph towards the right, in 2018, the overall bad loans or the overall NPA ratios in PSU banks had shot up. It was close to 18% in 2018, and if we jump to the number in 2023, it has come down to 5%. And how was it achieved? It was done by some key initiatives. Like the first step taken by RBI was the asset quality review. So the asset quality review was aimed at reducing the operational inefficiency and reducing the cleaning the bad loans and the balance sheet of the banks. And then there was the mega merger where lot of PSU banks were merged into smaller banks. Like there were 20 PSU banks at that point of time. And if I talk about the number as of today, there are close to 12 PSU banks. So the mega merger, the asset quality review, and the 4R strategy that we talk about have played a pivotal role in transforming and reducing the bad debts and the poor balance sheets of these PSU banks. The one more important pillar of the 4R strategy was recapitalization. So if I talk about just the financials, so from FY16 to FY20, banks collectively recorded losses worth 2 lakh crores in just 5 years. And then came the recapitalization pillar, which infused liquidity close to 3.1 lakh crores in from FY17 to FY21. So the recapitalization of bank improved the overall solvency. And again, the major aim of the 4R strategy was to improve the overall improve the overall risk controls, improve the technology, and increase the government support to these public sector banks. And if we look at numbers as of today, the capital adequacy of PSU banks stand at a decadal high of 15. And if we look back to the numbers, the where the all the mess had occurred, like in the years like FY18 or FY19, they were at 11.7. So today, PSU banks are very well placed in compared to those 4 to 5 years, and it overall indicates a better solvency for the overall banking system. If we talk about numbers, so banks have to maintain a minimum capital requirement. So for PSU banks, that is 12%. For private, it is 9%. But if we just have a look at those numbers, all those numbers are well above the requirement. They range from 15 to 18. And even they are very well, they are quite close to the private sector peers. So overall, the capital adequacy of PSU banks has improved significantly in these past 5 to 6 years. Now, if we have a look at some important numbers like deposit growth or credit growth, they are quite important in growing the overall profitability of the banks, right? So in terms of deposit growth, the share of public sector banks stood at 63%. Yeah, they have reduced from the previous financial years. It's because of private banks entering into the rural and the semi-urban regions as well. But again, they still occupy a very high number of deposits and higher market share in many specific areas. Even if we look at a number like the gross loans lent by the public sector bank, they are quite higher than the private sector peers. And overall, if we talk about the public sector banks and their perception in the rural and the semi-urban areas, it's quite different from the urban ones. So a person in a rural area would be still skeptical of parking his money in a private sector bank and may prefer a SBI any day over a private sector bank. So that's the image and the brand value that a public sector bank has in a mind of a rural and a semi-urban state. And if we talk about, the entire landscape of India, so 65% of the deposits are, as a 63% of the deposits are still with PSU banks, and 65% of our population still lives in rural India. So PSU banks have still a lot of play in the long run. If I talk about credit growth, so over the past 5 years, where PSU banks initially were ranked lower compared to the industry average, on the left side, if you see, the credit growth is as similar to the industry. So PSU banks have a mammoth share of 58%. Yes, the same thing, the share has reduced from the private share. It's because mainly of the private player entering those markets, but they still have a very higher share in the overall credit market. So the turnaround strategy, we saw that it eventually led to cleaning up of balance sheet. It improved the asset quality of banks, right? So how did it affect those numbers? So till 2020 and as of March 2020, PSU banks in totality had profitability negative of 5,000 crores. And post that, if we take 2020 as the base, PSU banks have grown at a faster pace compared to private banks. They have grown at a rate of 17 to 18% vis-a-vis that of private banks growing at 14%. Even if we talk about the net profits, the profits by PSU banks have outperformed the private sector peers in the last 3 to 4 years. And this can be clearly reflected in the earnings as well as the dividend payout. So the graph interestingly shows how PSU bank, where the dividend payouts of PSU banks were similar to the private sector peers till 2022. But after 2022, PSU banks have provided a dividend that is at least three times greater than that of a private sector player. The dividend of a private sector player stood at 0.72%, and that of a PSU bank as a sector stood close to 2.1. And that the numbers that I'm talking about is the industry average. And again, why have these numbers improved? It's again backdrop of improved earnings, better asset quality, better loan book, and overall diversification that the PSU banks have done. If we look at the valuation, yes, PSU Bank is trading at a premium compared to its historical levels. But there's one thing that we need to see. The overall market is right now trading at premium. And again, the state of PSU banks is much better that it was in 2018 or 19. So they are well equipped in terms of risk preparedness, in terms of asset quality, and there are lesser operational inefficiencies that used to exist in the past decade. So overall, the PSU banks are still reasonably, like, they still trade at a premium, but again, the entire market is trading at a premium after a huge run. But again, the PSU banks had seen a good amount of run up and still trade at a premium compared to the average. And again, if we see the average of compared to the Nifty Bank Index or Nifty 50, Nifty Bank is still historically below the average, but PSU Bank is still a bit higher. Even it's still higher than even Nifty 50 is trading at a premium over there. So the PB ratios of PSU banks have also inched up in FY24. So the below table shows the year FY24 return of the PSU bank. So we all saw a huge rally in PSU post 2022, right? And that is the returns that have been generated by individual constituent of the PSU bank index. Their returns vary. So SBI, the major large cap player, has contributed close to 33% in the financial year 24. But see players like IOB or Union Bank or even Central Bank, the numbers are staggering in that particular financial year. If we have a look at the key metrics of the PSU Bank Index, so we will see that there is again a significant reduction in the NPA ratios. So the gross NPA ratio ranges from 1.9 to around 5.73. Yeah, but it is far more lower than the old decade averages. And the overall improvement has come in these last 4 to 5 financial years. uh, Moving to the next slide. So, talking about the product that our scheme would, talking about the index that our scheme would be tracking. So, the Nifty PSU Bank ETF would be tracking the PSU Bank index. As earlier mentioned, it's reflecting the performance of all public sector banks in India. So, the eligibility criteria is pretty simpler. You companies should have 51% of their outstanding capital held by central or state government directly or indirectly. So you will have PSU from right from large, mid, small, or micro. All these PSU banks would be coming under this particular index. There is a basic liquidity check that's kept in mind that 90 they should have a trading frequency of 90% and a listing history of 1 month. And then there are some standard index rules that are followed, like no stock would be having weight of more than 33%. The top three stocks won't be having a cumulative weight of 63%. And in terms of rebalancing, the portfolio would be rebalanced on a semi annual basis, and the weight resets would be done on a quarterly basis. So, if we talk as of now, there are 12 PSU banks in India. So, as previously mentioned, there was a mega merger where the 20 PSU banks were merged into 12. And going forward, if there are more mergers, yeah, the portfolio constituent would shrink a bit. Talking about performance, so post 2022, PSU banks have, as I previously mentioned, the negative part was gone. Like after 2022, the negative cycle had ended and the 5 year lull period for PSU banks had ended, and they have started recording better profitability. Post 2020, they have seen better asset quality, better revenues, and ever better loan qualities. Like the quality of loans have been much better. So overall, PSU Bank has outperformed both the broad-based index, that is Nifty 50, and the private bank index by a huge margin. At the same time, where private bank index gave a return of 11.7%, your PSU Bank has given a staggering return of 46%. And at the same time, the 3 year return of Nifty 50 index stood at 15.2%. And again, the outperformance has been delivered due to the improvement in the balance sheet and the asset quality of the banks. If we look at the periodic performance over a 1 3 5 year period, PSU banks have delivered a good amount of returns. The 5 year CAGR is around 24%. It's far higher than that of the private sector players. On a long term basis, yes, there were periods of underperformance. So you will be seeing lower returns in the 15-year or 10-year cycle. And that can be clearly contributed to the inefficiencies and the poor NPM or poor loan management that used to prevail at the public sector banks before the 2016 or the restructuring that was done by the RBI and the Ministry of Finance. And if I talk about the performance versus the broad-based indices like Nifty 550 in the bull run, the PSU Bank has outperformed them by a significant margin. If we talk about the broad market benchmark Nifty 500 index, it generated a return of 41.6, and PSU Bank delivered a 16% extra return of 57, like at a total of 57%. Over a 5 year, again, the outperformance continues to prevail where Nifty 50 gave a return of 19. The PSU generated an extra return of 5%. Comparing the performance versus the other major sectors of India like IT, auto, PSU banks have significantly outperformed them. So again, the performance, there are pockets of performance that have been seen. So you'll be seeing that it has outperformed the other sectoral indices over periods up to 5 years. Over 10 and 15 years, yeah, the underperformance still prevails. Talking about the calendar year performance, so when I talk about PSU Bank, it has been more of a tactical play in the last 4 to 5 years. So, at if I talk about a time like 2018, there was lesser investor confidence in these banks. There was lesser interest as well in these particular in this particular segment. But since the recapitalization and the turnaround that has come in the last 3 to 4 years, you can see that PSU banks have outperformed the private sector. Private sector plays by a huge margin. If I just talk about the post-COVID recovery in 2021, where private banks returned 4.9%, PSU returned 44. In 2022, where private banks returned 22%, PSU delivered a return of 44. And if I talk about in 2023, it was again 20% extra return than the private banks. So PSUs have seen a good rally in the past years. And if I go back to the previous calendar years, yes, there were significant periods of underperformance. There was a typical down cycle from 2016 to 2020. And again, that can be clearly related to the cleanup that was occurring at in the public sector banks. If I talk about the portfolio, so the portfolio of Nifty PSU Bank Index has a total of 12 constituents. The top five constituents contribute to close to 80% of the weight. SBI remains the constituent with the highest weight, around 33%. It's followed by Bank of Baroda, Canara Bank, PNB, Union Bank of India. And when you have a look at each of the performance, look at each of these companies on a standalone basis, I'll definitely assure you that 8 out of 10 companies you will be seeing a stark improvement in their overall balance sheets, the profitability, the asset quality, and the bad loan portion that used to prevail back in the 2016 to 2020 era. Finally, to summarize why you should consider investing in this particular product. So, if you are looking for a pure play exposure to PSU banks, you can consider this particular ETF. So, if I talk about the weightage that PSU Bank has in Nifty, like PSU banks have in Nifty 50 or the Nifty 500 index, it's very low. In Nifty 50, the weightage is around 8 to 9% of the combined of all the PSU banks. And if you are looking for a pure play exposure on the public sector banks, this is one product that you can clearly rely on. In terms of overall improvement that has occurred, so PSU banks have seen a significant improvement in their balance sheets, asset quality, and risk preparedness, and that's the primarily reason we saw a significant pocket of outperformance in the past 4 to 5 years. And if we talk about considering allocation in the in this particular product, there are two ways of looking at it. You can either consider the product from a tactical point of view. So there may be investors who may be willing to invest in these products on backdrop of events like the interest rate cuts or the US Fed events that have been occurring. And on the other side, you can still bang on it for a from a long term point of view, where you know that the rural portion, it still remains the large unbanked part of India. As previously mentioned, the credit penetration in India is in rural part of India is as low as 20%, and PSU banks have established that forte in the semi-urban and rural areas. So going forward, as the financialization occurs across the masses, PSU banks can be one big place where the entire cycle would be where the entire financialization occurs. And lastly, we would be launching the product at the lowest TER vis-a-vis the other peers in the market. Talking about the NFO period, so the NFO starts from today. It's going to be till September 30th. It's a passively managed scheme, so you will be seeing returns close to your PSU Bank benchmark index adjusted for tracking error. The allotment is set to happen on October 1st. So the listing that happens 5 days after the allotment. So it would be somewhere around October 8 or 9. So the minimum investment is 5,000 and there is no exit load charge for it. So I'll be opening the floor for questions now. So if there are any question, I'll be very happy to answer them. So there are some questions. I'll answer them one by one. Okay, so there's one question that if PSU is overperforming private banks in almost every ratio, then the private bank, why the bank ETF have almost the same return? See, I like to slightly correct you on that. The returns of the Nifty Bank Index is a mix of private as well as PSU players, but again, the majority of the exposure is to private sector. But if you compare the performance over the past 1 year, like in the past 6 months, it may be similar, but in the past 1 year, you'll be seeing a significant pocket of outperformance. I'll just go back to the previous slide where I've shown the outperformance vis-a-vis this one. Uh, so So if you have a look at the 1 year period, in the past 1 year, the return generated by Nifty PSU Bank was 57%. That generated by Nifty Bank Index, that is the overall banking index, reflects the overall banks in India, was around 17.8%. I'll take the next question. So will Mirae Asset PSU Bank ETF return be same as the other PSU Bank ETFs in the market? So see, again, it's a passively managed scheme. So the returns would be similar to Nifty PSU Bank Index. Yeah, obviously there would be some margin, like how each of the AMC manages that scheme. So we have come out in this particular. Like in this particular ETF, we will be coming out with the lowest TER, and again, your cost of the TR, the cost creates a overall negative impact of your overall return on your portfolio. So you may see slightly higher performance than the other PSU bank ETFs, and that's primarily because of the uh, lower TR that we are bringing out in this particular product. So there's one question that as we see PSU banks have rallied, is there a chance for private banks? Yes, there is a chance for private bank to rally as well. Still, private banks have been at historic, like compared to all other sectoral indices, bank still remain reasonably valued compared to the other sectorals like reality or like even if we see IT. But yeah, and they have again on the backdrop of better earnings and better loan growth that these private players have shown. You can see a private banks to rally as well, and for that, you can consider the Nifty Bank ETF product, which gives you around 66% exposure to private bank players as well. So there's one question that most of the private players are now present in rural and semi-urban locations and have all products, and PSU shares is declining. So, see, as I previously mentioned, PSU banks have a good amount of trust and brand value among the rural and semi-urban areas, and they have an established trusts in the past, the past decades. So when financialization occurs down the masses, so your PSU banks might have a better play as compared to private play. And again, the overall operational efficiency and the overall lending by this particular that by the PSU banks have improved a lot. So you can see, like when financialization occurs, PSU banks may do good in the long term. Okay, so there's one question. Sectoral ETF is more risky, and also public sector bank has lot of risk of NPA. See, yes, I'll definitely agree to that. A sectoral ETF will have higher risk compared to a broad-based product like Nifty 50 or Nifty 500. But again, from a tactical as well as from a strategic allocation point of view, if you believe that events like the US Fed rate cut and the interest rate cuts in India are going to positively impact the PSU banks, you can consider allocating in them. And if we talk about from a long term perspective, the overall financial health of these banks are in a good shape. The risk preparedness is better, and they are more better equipped to tackle any issues. So from a long term point of view, you can still bet on PSU, and they don't have that the similar metrics that they used to have back in 2015 or 16. The numbers have increased tremendously in these past 5 to 7 years. So there's one question related to what is the portfolio of this ETF. So the portfolio, as I previously mentioned, it's a 12 stock portfolio. Banks that have seen 51% share of central or state government would be eligible for inclusion. So right now there are 12 stocks with the top five stocks having a weight of 80%, and SBI is the highest constituent in this particular portfolio. So there's one question related to like I'll just summarize the question. Like PSB works on the direction of government, and they lend credit to low ticket number and huge numbers. See, financial inclusion programs are, yes, they are going to be primarily driven by the PSU bank, and government would be, like you government may be using them as a vehicle. But again, if you see, providing subsidized loan and providing better credit facilities, it has led to increased financialization of the economy. So overall, yes, they would work at the discretion of the government, but again, in the long run, it's important that as India grows, it has to still bank the unbound portion of our country. So and also to add to that, you have asked that how does that fund answer to the headwind. So see, it's a passively replicated scheme. You won't be having adjustments to it. So it's a pure play sector play, like pure play sector play, that if you want to bet on PSUs in the long run or the short term, you can consider this for allocation. So the product, so one more question, like how would be the product different from PSU Bank Bs? No, it would be like both the products track the Nifty PSU Bank Index, but yes, as I previously mentioned, the product would be coming at a relatively lower cost, and the lower cost would in the end translate to better return because there would be lesser expenses that are deducted from the scheme. So you might see marginally higher returns over there in our scheme. So, how is the price decided for this ETF? So, on the date of allotment, we'll be taking the closing price return index of this value. Like, let's take a simple example. If the index closes at 10,000, so 10,000 divided, let's by 1,000, so my NAV would be around 10 in that particular case. So, it's based on the closing price return index value on the allotment date. So there's one more question: why have been PSU bank stocks underperforming in the past 6 months? See, yes, they have been underperforming in the past 6 months, and we have seen a run up in private sector players as well. So coming impacts the important critical events like the interest rate cuts and the financial numbers due in quarter 2 would be the major force that would be would be a critical factor to see how these banks are doing in the next quarter. So there's one question to dividend yield. Yes, the graph shows dividend yield of PSU banks. So PSU banks, as I previously mentioned, on backdrop of the improved profitability, they have provided a higher dividend yield post 2022, where the private sector average stood at 0.71%. The PSU bank average stood at 2.11. That's around three times greater than that of a private sector of the private sector players. And again, the numbers that I'm talking about is the overall industry average. So the pricing, yes, it would be based on the, as I previously mentioned, would be based on the closing index value, closing price return index value on 1st of October. So, I'll just so there are multiple question related to why to invest. So I'll quickly summarize that. So post ILNFS and post the 4R strategy, the overall asset quality of banks have improved. The NPA ratios have gone down from the high of 2018. They were 18 in 80, around 18% in 2018, and they're now at 5% in 2023. So they have improved on backdrop of key initiatives by the government of India and RBI. From a short term point of view, like if you are concerned of factors like interest rate cuts or the US Fed events, you can consider the product for tactical allocation point of view. From a long term point of view, or from a strategic allocation point of view, as the financialization across increases across the masses, and India still being a largely still having lesser credit penetration, the PSU banks are going to play a significant role in the long run. So that's all from my side. I'll be ending the session now. If there are any more questions, you can reach out to our social media channel or visit our website for further information. Thank you.